Good morning, everybody. This is Stan for theartofchart.net, and this is a before and after video demonstrating a trade on gold. And this is something that I posted on the weekly call, which is a blog post on our website at theartofchart.net. And what we do there is we try to demonstrate how to trade futures, okay? And so what we have here is a setup, and I'll walk you through the setup and walk you through the results of the setup. Let's go backwards in time first to the setup. Okay, so here was the decline in gold, and we saw this as a potential X wave. Okay, so what that means is it's a significant turn in the market. Okay, we were theorizing at this point that this could be the X, or potentially this could be the X. Okay, and we didn't know which one would work out, but at this point what we do when we trade is we look at structure. Okay, and what we have here is a 3 up into the 63 area. Okay, and so this 3 up that managed to hit the 63 area, we were expecting a back test roughly in the 50% area, roughly around 43s, and we had our stop below the 0.618. Okay, so I would expect gold to come back into this area between 43s and 38s, find a turn, and go. Okay, we had a high window here, and what we do on the theartofchart.net is we use timing windows. Okay, we try to marry time and price. Okay, so this was a low timing window, this was a low timing window, and again, you typically get at least a bounce out of one of these timing windows. And we were expecting a significant move higher, as you can see, into the end of January, and then a pullback, and then another leg higher. Now, we posted this chart on the 1st of January, and we posted the blog post on the 2nd of January. So the 3rd of January came, and let's take a look at the real chart, and this is the real chart. Here is the inflection zone that I mentioned, okay, and we came right down into the area, and this chart I believe has rolled, if I'm not mistaken. Yes, it has. And so bottom line is we got into our entry, okay, and we got out almost immediately with our first third. Now, why do we do that? Well, we believe in risk-free positions. So what I try to do is I try to get in, and then on 50 back, and let me just delete this here and start over. Okay, so you know this was our entry on the 3rd of January. Now, what we did is we say this on every single trade, and I encourage it that everybody use this. The previous swing back, okay, when you get into the 50 back area or the 618 area, you take off a third, you put your stop to even, okay, which is what we did, okay. So right here at the very beginning, actually, I believe it was on the same day or pretty close to the same day. It was the same day, okay. So, you know, we're trying to get out of the trade, out of 1/3 of the trade, and we're putting our stop to even. That's called risk management, okay. At this point in the trade, this could have turned and gone the other way, very simply, okay? So that's a risk-free position, and in futures, you want to get into a risk-free position as soon as you can, okay? Our second exit, our second third was right here, and the reason we did that is this was a 3 up, okay? This was actually even a larger 3 up into this 100% fib area. And from here, we could have gone directly lower, and so we're taking off, we're taking profit along the way. It's called, you know, legging out. This is the 3P method of legging out of a trade. It's been around for decades, and it's very, very simple, okay? So you manage your risk, you leg out of the trade, and then you wait and see what happens. My stop is still at even, okay? Now, we hit our high window. Okay, timing-wise, worked out beautifully. Did I exit the trade? No, I waited because I expected a pullback and higher. The plan was to re-enter long here. I wanted to add back these 2 legs that I took off at 78s. Well, we never hit 78s, okay? So right there, I missed my entry, okay? What did I do? Did I panic? Did I get upset? Nope. This is a business transaction as far as I'm concerned. I don't have anything to worry about. I got other trades going on, so I put my money to work elsewhere, and I let my 1/3 just hang out there and make money for me. So at the end of the day, I punched out here on a nice big rally up into 1246, which is the bottom of our high window. We're expecting 53s. Did I wait until we fully got to target? No, I didn't. Nice rally, great place to exit. Negative divergence on a new high. The high window here, the center date is like the 10th, and it can go higher. It can go to 53s, but I'm not greedy. Great trade, $95 in gold. I'll take it, and I'm waiting on the back test. Back test into probably, roughly speaking, the next low window. I don't have it on the chart, but it's roughly around the 7th of March, and I'm waiting on that. I'm not trading the short. Why? Because this is counter trend. Counter trend represents greater risk to your portfolio, and on the weekly call, I'm trying to demonstrate easy setups, risk-free, as much as possible, risk-free trading. So in this portfolio, what I'm doing is I'm avoiding counter trend trades, except for the larger counter trend trades like the one we made in coffee. Okay, so at this point, this is going to be a counter trend trade here, probably starting next week, okay, which is going to be roughly the 11th of, I'm sorry, the 11th of February, and I'm looking for a back test into the first week of March, and I'm standing aside on gold until then. That will be the area that the time window that I will be looking for the next entry. So this is how we do things on the Art of Chart. We have a very clear methodology. Come join us for a 30-day free trial and see what we're about. This is Stan for theartofchart.net. Everybody trading well. Take care. Bye-bye.